Welcome back to another episode of Palisade Radio. I'm your host, Karema Mutlu, and with me today we have the CEO of Bannerman Resources, Brandon Munro. How are you today, Brandon?
I'm great, thanks, Karen. How are you?
I'm very good, thank you. Today we are in London on the 9th of September, and it'd be good to catch up and talk about the WNA Symposium. So talk to us about the general sentiment throughout the conference this year. Has there been anything new that you've learned, perhaps, from your contacts? And do these conferences provide you with any indicators or insights as an investor? Are they useful in terms of understanding if the uranium market is now more hopeful or optimistic going forward?
Well, first of all, the sentiment certainly is improving. The first time I came to WNA was 2010, and it was a very different world back then. It was pre-Fukushima. The sector was in a nuclear renaissance and very positive since then. And of course, after 2011, the entire nuclear sector has been beaten up on so many different fronts. This is the first time in many years that I've seen a very positive tone coming out, and it was backed by data as well, apart from a number of inroads that the association itself has made with inter-ministerial panels and NEA and OECD and IPCC and so forth. The evidence was put before delegates. Russia's export program now has a forward order book of $133 billion. The US, we had a fantastic speaker, Suzanne Jaworski, from the DOE in the US, the Department of Energy, and she gave a very buzzy presentation detailing just how much government support is being lent to nuclear, and gave us a good insight into the initiatives that that are underway there, which not only presented the picture to delegates but gave them a strong sense of confidence that the Trump administration is going to achieve a renaissance in nuclear in the US. We also, of course, have the backdrop of China recommencing its build program, and in the last few weeks announcing 6 reactors to be built with a plan for the next several years of 6 to 8 every year, new reactors. Positive signs out of India. There was an announcement during the week that Rosatom was committing to build 20 reactors over the next 20 years in India. All of those factors painted a very clear picture for delegates that once again, after several years of decline post-Fukushima, the nuclear industry is back on its feet and it's looking good. And I think that affects people's sentiment and mentality throughout the sector. And it's great for fuel buyers, the people that I'm going to be interacting with to sell uranium to. It's great that fuel buyers are getting this message and now understand that once again the industry is on the up.
Fantastic. We can see perhaps a new bull market on the horizon, but it doesn't necessarily mean it's going to happen today or tomorrow. So what's the major misconception within the uranium market today? Now that we've had some clarification around Section 232, do you feel the broader market still doesn't care or is not interested in uranium? What's your sense for uranium today?
It's very interesting because I would describe the investor sentiment around uranium right now as despondent. It's been pretty tough across all sectors with the exception of gold and more recently nickel, but add to that a sense of disappointment that's in the uranium sector, and I think it came from misconceptions around Section 232. And primarily those misconceptions were from investors who failed to address the utilities perspective on Section 232. If we look at misconceptions in the market today, I think the major misconception is that the expectation that we are just around the corner from long-term contracts being executed and signed and the next bull market starting. Many investors, I think, believe or perhaps hope that we'll see that contracting round start by the end of this year. I think it will start in some ways by that time frame, but it's still got more time to run. Utility fuel buyers, particularly in the US, they'll leave WNA with new insights, a new perspective, that positivity we talked about. They'll have a much better understanding of supply and demand because of the fuel report that WNA released this week. But it takes some time to digest. Then they need to wait until the 10th of October for the working group that came out of Section 232 to be resolved. That might not necessarily be public. And it's only by the end of October that all of the US utilities get together in Nashville for an NEI conference, Nuclear Energy Institute conference. So when there's no immediate urgency to get out and start contracting, the fuel buyers, they'll be looking at those events as they were looking at Symposium, what we had last week, and they'll be saying, well, I'm not going to start yet, I'm just going to wait a little bit longer, get that extra information, get that extra certainty and clarity, and then we'll formulate our strategy. What we are seeing, though, is we are seeing some feeling out of the market by the bigger utilities. And from what I'm hearing, they are starting to understand that there isn't a lot of diversity of material at current prices, current term prices, low 30s. So they are getting the picture that if they want to diversify away from Kazakhstan, they do need to pay a premium. I think what we'll see is the carry trade, the mid-term market, that sort of 1 to 3 year delivery time frame, I think we'll see that start to fill in the meantime. And traders are wise enough not to go naked in the current market. So in order to provide those pounds for 3 year delivery, they will need to carry them, which means they need to secure them in the spot market at the point where the contract's entered into. That's what will generate increased liquidity in the spot market. I think there's very little liquidity and very little product available at these prices in the spot market, so any level of liquidity will test current pricing. And of course we still have Cameco who need to come back into the market to buy 10 to 12 million pounds before the end of this year. So those factors combined, I think, will initiate appreciation in the spot market as a precursor to term contract activity. Now, if I go back to your question before about where the market's at, I think it's really interesting because this is the strongest sense of anticipation within the nuclear industry and within the uranium industry that I've seen since before Fukushima. We are in that situation where, despite the fact that we've got a flatlining spot price that's been dead at $25, $25.20, $25.30, or very low volumes, you can really start to piece together a sequence of events that can see it back through $35, $40 very quickly. And once those events start, I could see it happening within a matter of 8 to 12 weeks. That's going to have a very interesting trajectory for investors, and much the same as what happened in nickel, which is it had been called as a favoured play for a couple of years, and it was really a case in nickel, as I think you have talked about, that the despondency or the darkness just before dawn very much played out, and suddenly it caught everyone by surprise, even though 2 years before that it had been quite a predictable type of turnaround. I think that's exactly where we are in uranium right now, and whether it takes 1 month, 2 months, 3 months for that re-rating to start to occur, I think that's a question mark. However, when it happens, I do believe it'll happen quickly, and it'll take everyone by surprise, even though we've been talking about it for the last several months.
Yeah, some great insights there. Okay, let's move on and talk about the global market for SMRs. Will these types of applications within the uranium sector broaden the appeal for nuclear as an energy source for the average mainstream consumer that they can get behind and be comfortable with? Or are the cost savings with using an SMR already enough of a driver for this type of application going forward and spread globally?
SMRs are a really big topic at the moment. They occupied quite a bit of the program at WNA Symposium. And for good reason. There's about 70 different companies producing either an advanced reactor technology or a SMR, being small modular reactor. And they've got much broader appeal, really for two reasons. The first one is, in some situations, they have appeal at a political level that large-scale reactors don't. Australia being a good example, where we've seen a nuclear power debate at least emerging with the parliamentary inquiry that started last week. A year ago, that would have been unthinkable in Australia. It was such a taboo. such an unnecessary taboo, but a taboo nonetheless. And part of that re-emergence of open discussion is that SMRs offer a very different solution to traditional large-scale reactors. Their safety systems are more easily demonstrated to public. A number of the technologies reprocess fuel within the unit so that what's left is low-level radioactive material that's only hot for 300 years. So they deal with a number of the negative perceptions of nuclear power at a time when it's realised that clean energy can't just simply come from renewables. It has to come from baseload sources at the same time. Now, there's also a number of technical considerations where small modular reactors really open up markets. We've just seen completion now of a floating nuclear power plant that Russia has developed, that Rosatom has developed, and they're in the midst right now of towing it to its resting place. And that's a fantastic solution. That's about a 70 megawatt floating reactor that can operate in extremely harsh conditions. It's being towed to Savansk, which is a remote part of Russia, to build any other form of infrastructure. Gas pipelines and so on would be enormously expensive. And they've got plans to roll out a number of those types of reactors, as does China. Another example where small modular reactors are helpful is if you were to look at the Australian grid, because it's such a distributed electrical grid based on modest-sized coal power plants, it doesn't have a lot of capacity for large-scale 1, 2, 3, 4, 5, 6 gigawatt nuclear power plants. But there are plenty of places where you can close down a 300 megawatt coal power station, literally the next day connect in and start feeding into exactly that same grid a modular reactor of a total power output of 300 megawatts. So the ability to displace moderate-sized coal power plants, I think, is an extremely important part of that equation. The other thing is cost and time to delivery. The secret sauce in the economics of a small modular reactor is that they can be factory built and put onto a truck, for example, and then put into place. So the reactor core and all of the associated technology gets built in a factory rather than on site, where there's a huge number of production benefits. At the same time, the civil work is being undertaken at the site, and that means that there's a lot more predictability of time frame, and most of the SMR developers, they're working on a total build time of about 3 years. And that's competitive with many large-scale electrical installations, and the cost will be highly competitive even with cheap solar and cheaper wind.
Very good. So let's move on and talk about a bull market in uranium once it gets going. It moves very fast and can catch investors sitting on the sidelines off guard, as we've previously talked about. We've talked about your previous experience within a uranium bull market and the moves that can occur in the juniors. So what will the top of this bull market look like to you, Brandon? Will it involve a frenzy of M&A activity with the best juniors with great resources in good jurisdictions being bought out? This appears to occur quite frequently at the top of bull markets or bull cycles within the resource space. So what are your thoughts?
So first of all, I think on the one hand, it will behave like any resources bull market. And that consolidation activity is important for this sector, partly because there's a fairly limited amount of expertise in the sector, and uranium is a complicated business. So the management and experience will naturally accumulate in several companies rather than being sprinkled and distributed amongst many. The other thing is that from a utility fuel buyer perspective, they are looking at a large array of potential projects where company promoters are telling all of them that we're going to be on board by this time, and even the early stage ones, they're being portrayed in a very positive way. So the utility fuel buyers have a misconception that they're going to have a large choice of available supply. And we know that that just won't be the case. If you look at, even with all of the pricing support during the last bull market, there are only 4 mines built in the West and 2 of them failed. So that aspect, I think, is important, where you'll see a consolidation into probably less than a handful of serious operators with that management capability, and also a pipeline of projects, so that instead of having 20 projects all in one line competing for utilities' attention, you'll see them lumped in 3, 4, 5 groups of companies who are each saying to the utilities, we're only going to bring on 1 project at a time. Now, the other thing that's interesting, and I think it's quite different to the last bull market from 2005 and 2007, is the influence of geopolitical risk right now. If you look across the globe, geopolitics are at their least stable since the collapse of the Soviet Union. And that's only been exacerbated by trade disputes at the moment. So when you try and look forward a few years to a full escalation of a bull market, unlike last time, the key to this next phase will be geographic diversity. The utilities and major sovereigns are already realising that there isn't enough material that will come out of Kazakhstan to be able to supply both Russia and Chinese export ambitions, let alone the domestic builds that both of those countries are undergoing. And more than that, the level of geopolitical tension that we're seeing between America and Russia, America and China, even China and Russia that's concentrated on this Kazakh supply, which sits between Moscow and Beijing. All of those factors are driving the large-scale nuclear build-outs to require the uranium in a highly secure sense. And really that just means inventory, and we've seen China building inventories in the same way that Japan built inventories in the 80s and 90s for their national security of energy supply, but also in the form of owned projects. So we'll see a consolidation drive for owned projects, and that will have a distorting effect on the consolidation drive. And the reason for that is, if you look at the key centres for uranium production in the world, first is Kazakhstan. So only Kazatomprom can own a majority of a Kazakh uranium project. So it's only an opportunity to joint venture, which all of the key markets are looking to do. But it's not ownership. It's a security, but it's not the ultimate security that they will need. The next one is Canada. So again, by law, a foreign entity can't own 51% of a uranium mine. There's only been one exception ever, which is when Paladin was able to convince Ottawa to buy the Michelin deposit on the promise that they were the only group that could possibly develop it. And of course it hasn't been developed. So I don't think anyone can really come in and try that line again. Then you move to Australia. The Foreign Investment Review Board in Australia is likely to be very sticky about outright foreign ownership of Australian uranium mines. Uranium is still a politically sensitive issue in Australia, and even building a 15% stake in Australia by a foreign entity requires that approval. And the trajectory, in my opinion, is that becoming more difficult and Australia becoming more closed rather than going the other way. So then what does that leave? It only leaves 2 options: to go into Africa or to become a trailblazer in a brand new jurisdiction that hasn't exported any volume of uranium before. And for large-scale buyers like China and India and the Middle East and South Korea, that's not a particularly palatable option. It's hard enough for those groups to be buying and building and developing mines in foreign countries, let alone needing to handhold a government through developing all of the bespoke infrastructure in the government that's required to be able to export uranium. That's IAEA interface, it's Class 7 interface. It's a huge amount of governmental structure, often in countries that struggle with regulation anyway. So that just leaves Africa. And a country like Namibia It has very good bilateral relations with China, as we've seen with the purchase of Rossing uranium mine from Rio Tinto just in the last couple of months, and of course the construction of the Husab mine, which was acquired during the last boom for $2.2 billion. And it has very good bilateral relations with Russia. It has very good bilateral relations with the US and the West at the same time. And there are already Indian mining companies operating inside Namibia. So Namibia is in a very unusual situation of being able to offer not only ownership to each of those key markets, there are also Middle Eastern investors in the Namibian mining industry. So it can offer ownership capability that's not illegal, but it can also offer bilateral security in the sense that each of those nations have got not only a positive relationship, but an influential relationship with Namibia. And it's that security that commercially we might try and achieve through trade treaties, but they would achieve in a direct bilateral sense. So, a lot of detail there, but that is why I think the next consolidation round will be quite different to the last one, because that's where the key drivers of consolidation will come from.
Excellent. Okay, as we begin to wrap up, Brandon, is there anything else you'd like to talk to us today? And I understand you were part of the 2019 version of the Nuclear Fuel Report, and I understand it also gets published every 2 years. So can you give us a few details about this?
Yeah, I'd love to actually, because it was a really good process. I was very proud to be the chair of the demand subgroup. So the way the Nuclear Fuel Report works, as you say, it's produced every 2 years. And it looks at the entire nuclear fuel cycle, so not only uranium production, but the conversion of U3O8 into UF6, the enrichment of that UF6 into an enriched product that can go into reactors, and also the fabrication of that enriched uranium into fuel bundles, plus the impact of secondary supply across all of that. So each of those groups have got a working group that's comprised of industry experts providing very interesting insights, but also key information that goes into that report. Now that's the supply picture. The demand picture is set by the working group that I was chairing, together with a co-chair who was from EDF, the largest utility in the world. So we co-chaired this committee, which had the responsibility for building from ground up on a reactor by reactor basis the demand picture between now and 2040. It was a really fascinating process, like to sit in those debates whenever there was a slightly controversial country or slightly controversial group of reactors debating whatever it might be. Are they going to get a life extension? Are they going to get approved? Are they going to be built? Most of the time we'd have an in-person debate and bring an expert from outside the organisation in who would present on China, France, etc., etc. So it was great learning, but also it was very gratifying because it's an excellent product. The methodology we turned over and improved in many respects. It's been widely acclaimed, I think, from within the industry, and we're starting to get feedback from outside the industry, which is positive as well. And the nice thing is, because of the factors that we talked about with all of this positive sentiment and news going on in the sector, that was also reflected in the numbers. So it's constructed of 3 scenarios, a low scenario, reference and an upper scenario. And for the first time in 8 years, all 3 of those scenarios demonstrated an increased level of demand. So that's a very strong indicator of this inflection point that I was feeling last week at the symposium.
Okay, well, thank you for your time today, Brandon. It's been great speaking to you today.
Thanks as always for the opportunity.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?